What is going on, investors? Welcome to my channel. This is Jason, aka the Frugal Investor. This video is a deep dive analysis of PayPal stock. We will see whether this stock is a buy or a sell. With that said, let's get right into it. As we all know, PayPal stock it has been getting a lot of news in the past 6 months. The past 6 months, the stock is down by almost 28%. From its one-time all-time highs of $309, it's currently trading at a price of $187. That is almost a 40% decline in the stock price. Now, the main reason the company is facing this decline, there are two reasons. Number one is the miss on earnings on this quarter. The company missed out on its earnings by 33 million in this quarter. And the second reason is that eBay is developing its own payment platform. eBay, which was one of the biggest top line generators for PayPal, is moving away from PayPal. Now, the revenue it missed its quarter is short-term fear, and short-term traders and short-term people who hold the stock for short-term are moving away, because in the long term, if you look at the last quarter of 2016, the revenue was 2.98 billion, while in this quarter the revenue is 6.24 billion. So it has almost doubled. So that fear is completely irrelevant for long-term investors. If we look at the earnings per share in the last quarter of 2016 were 42 cents, while in this quarter they are $1.15. So earnings have gone up by almost three times, and the revenue has gone almost doubled in the long term. Okay, so this first fear is completely irrelevant. The second fear, which is surrounding eBay, which is because eBay is moving its business away from PayPal. eBay will constitute about over 13% of their business, of their top line in 2020, but this quarter it has less than 4% of their revenue generation from eBay. eBay is developing its own payment platform. So less than 4% of revenue is being generated by eBay. Still, they are able to grow at record numbers. This year, their top line grew by almost, this quarter actually, their top line grew by almost 18% without eBay. So that second fear is also completely irrelevant. These are the two fears that are putting a lot of downward pressure on the stock. But as we mentioned, they're completely irrelevant. Now let's look at the business of what does the fundamentals of the business look like. PayPal as a business, it is like an ecosystem. You get introduced to the ecosystem through free peer-to-peer transactions. You can send money to anybody without any charge. That's how you get introduced to it. Then you can use this platform to check out at merchants like Walmart, merchants like Amazon. You can use them to pay for your experiences over there, pay for your services over there, whatever you're buying from there. And then PayPal charges a fee to the merchant, a percentage of your transaction. So if you think about it, this is also a great inflation hedge, because once the price of things goes up, the amount of the size of transaction goes up, the money the people are paying for things, that goes up, and the percentage, even though the percentage they are charging remains the same from the merchant, the amount goes up because the size of the transaction is going up. So this company is also a great inflation hedge if you think about it. Now 75% of the retailers are using PayPal, so it's one of the biggest players in that space. Also, they have over 416 million active accounts. 460 million people are using the platform, so it's a whole huge network effect. Now, they have this huge amount of customers. They can buy cryptocurrency, they can hold money in their platforms. Merchants can take loans, they can use the buy now pay later service, which is also one of the highest growing factors in this ecosystem. They can use Honey platform for searching deals. So this is like a huge, like a honey hive, like a beehive, and the bees that are customers, they get attracted to it, and once they come to the beehive, they stay there because it is their home. They have so many things at one place, they don't want to go anywhere. So that is one of the most bullish points about PayPal. The negative criticism, the bearish point about PayPal that comes up is its competition. Competitors, they can take a lot of market space away from PayPal, and they can provide the same services that PayPal is providing at cheaper prices or things like that. And to that my answer is competition is irrelevant, because Microsoft Bing cannot compete with Google. Yahoo cannot compete with Google. Google is the first choice of search engines. Same thing applies here to PayPal. PayPal has such a huge moat with its 416 million active accounts that it is hard for competitors to beat that moat. It has such a huge moat with over 75% of retailers and merchants using it as a checkout service that it is hard for competitors to take away that market space and beat PayPal. They have the first mover advantage, and they have the biggest market space captured in this space, just like Google, just like Facebook. It has a network effect like Facebook. It has a moat like Google. So that it makes it hard for competitors to beat PayPal in this space, and that is why I think that the bearish point that comes about competition taking away space from PayPal is completely irrelevant. Now the question comes up: where is the future growth coming from? As growth investors, as long-term investors, we want growth in our portfolio. So where is the future growth coming from in PayPal? The future growth is coming from these 416 million customers that are increasing by almost 15 to 20% every year. They have a network effect, just like Facebook has a network effect, and that just keeps on compounding and compounding, compounding and compounding. That is where the growth is coming from. The second part where the growth is coming from is the buy now, pay later service, which is increasingly becoming more and more popular among people buying from merchants like Amazon, people buying from merchants like Walmart. PayPal provides that service, and that is also where PayPal is seeing a huge amount of growth in the upcoming years. The third point where growth is coming from is the crypto. They have introduced a crypto service where you can buy crypto on their platform. That is also where the growth is coming from. The fourth point where growth is coming from is their global reach. Okay, they are available at all the merchants across different multiple uh, in multiple nations, and they provide the buy now pay later service in all those countries and all those platforms. Now the other part where growth is coming from is a merchant loan. The PayPal is also providing merchant loans to small businesses that use PayPal at checkouts. That is also where the growth is coming from. Also the Honey service, which is the service which gives you deals when you're making purchases. That also adds to the network effect. It brings more people to the ecosystem, thus making the whole network bigger. That is also where the growth is coming from. They also purchased Paydi, which is a Japanese company for buy now pay later services. So they're trying to make this ecosystem bigger and bigger, and once you are in this ecosystem, you have all these different platforms. You can buy cash card, you have cash cards, you can do the transactions physically. Okay, you can buy crypto, you can do so many things. Okay, you can use it at almost all merchants. You can take loan, the merchants can take loans. You can do so many things with this platform. That is why I compare it to a beehive. Once the bees get attracted to the beehive, it becomes their home. It's hard for them to move away. They become so comfortable with it, it's hard for them to move away. Just like Google, once you start using Google, in the beginning it was hard for you to use Bing, it was hard for you to use Yahoo. You became so comfortable with Google that you stuck with it, and that's the same thing that applies here. So we talked about the business, we talked about the stock price, we talked about where the growth is coming from in the upcoming years, we talked about network effect, we talked about why it has such a huge moat, huge moat with its 416 million customers, and why it's better than all its competitors, and why I think this will be a multi-trillion dollar company down the line. Now let's look at some of the numbers of PayPal. The total revenues have gone up over the past 9 years. Okay, the net income has gone up over the past 9 years as well. Over the past year, it has almost doubled. From income, the bottom line has doubled in the past year. Now, if you look at the diluted earnings per share, it has gone up from 78 cents to $3.54. So it has almost quadrupled. If you look at the shares outstanding have been going down. They recently announced a repurchase of shares. So they're constantly doing that every quarter. They're repurchasing some of the shares back, which is almost a wonderful thing. Gives more money back to the shareholders. So diluted earnings per share is $3.54. Shares outstanding are going down constantly. So fabulous income statement. Now let's look at the balance sheet. On the balance sheet, what we are looking for is the tangible book value. If we look at the tangible book value per share, it's $8.39. So if we liquidate everything in PayPal, the stockholders get $8.39. Okay, if we look at the net debt is negative. That the company doesn't have any debt at all. Okay, which is fantastic for a company like that. So amazing balance sheet. Now let's look at the cash flow statement. If we look at the cash flow statement, the free cash flow per share that they're generating is $4.25. Now $4.25 is being generated per share in free cash flow. Okay, if you multiply that by 40, if you multiply that by 42, that's when you come up with 178, and you add tangible book value of $8, that's when you come up with the price of the stock, which is around 187. So that means that on the basis of free cash flow, this stock is trading at a P by E of 42, which is quite expensive. Okay, it's very expensive. That is the one negative point about PayPal. It's trading at such a high multiple. But let's look at the long term. Okay, let's look at 10 years from now, 15 years from now, the forward P by E. The forward P by E that you will be paying on today's price is 18 P by E in 2025, based on the amount of growth that the company is expecting. Okay, a P by E of 18, a forward P by E of 18 for a company like PayPal, which is going to be $1 trillion company. because of its huge moat and its ecosystem. This is like Google in the making. And you're paying a P by E of 18, a P by E of 12 for 2027, a forward P by E of 12. Okay, for price by sales of 2.15 in 2030. Now I know the earnings are far into the future and there are a lot of factors that can change. There are a lot of things that can change. But this is the platform of choice. 416 million people are choosing this platform. All the 75% of merchants are choosing this platform. Those signals, they tell you something. They tell you that this is the platform of choice. This is the platform of the future, just like Google, just like Facebook. So that is why I'm so bullish on PayPal. And I think this forward price by sales number, forward P by E number, even if we are paying a high price for this, it is very well deserved. Very, very well deserved. And that is why I'm so bullish on PayPal, even after these high P by E ratios and the high numbers. Let's look at the cash on hand for this quarter. For this quarter, PayPal has over almost $20 billion cash on hand, and they have a net debt of around $8 billion. So that makes them left out with almost 12 to $13 billion cash on hand. Now, the market cap of the company. Let's look at the market cap of the company. The market cap of the company is 220 billion. You take out the cash on hand, gives you $200 billion for the market cap. Okay, almost $5 billion is being generated every year for their free cash flow. So the cash on cash return that you're getting from PayPal for this year is 2.5%. The cash on cash return based on the free cash flow. But in the long term, that cash on cash return becomes even bigger as the company grows. Those are some of the bullish factors about PayPal. Those are some of the points that we discussed. Uh, uh, Great profit margins, great net income margins, great return on capital, return on equity. Not better than its competitors, some of its competitors, but still in a fabulous state. Okay, one of the biggest players in the market, and that's what makes it so fantastic. So that was my analysis of PayPal. Again, me personally, I do not hold any stocks. I bought PayPal at 192 and I ended up selling it at 239 just before it went down. Now I'm adding it again to my portfolio. It's going to be 8% of my portfolio overall, and this is going to be one of my biggest holdings as well. I'm going to start adding money now at this price. If it goes down, I will buy more. If it goes down, I will buy more, and I will keep buying more because I am bullish on this business in the long term. I think this will be $1 trillion companies in 7 years, 6 years from now, just like Facebook. So I'm very bullish on PayPal, I'm very bullish on Facebook, and I'm going to keep adding it to my portfolio and make it one of my biggest holdings. So I'm putting my money where my mouth is. I think this is a great company to buy. I think the price is really attractive right now. And if you talk about the stock price, if they can keep this multiple going, they can keep this growth going on, then and the multiple remains the same, even the stock price will double or triple. But I'm buying it for the business fundamentals. I'm not buying it for the stock price. That is a cherry on the top of the cake. So that was my analysis of PayPal. I'm buying it for my portfolio and what I think about the business. Please don't forget to like and subscribe. This is the Frugal Investor signing out.